Hey guys, welcome to this MF Corner YouTube special. I'm Pavitra and today we're going to talk all about mutual fund ratings. Several agencies like Morningstar, Value Research, CRISIL all put out these kinds of ratings which are actually quite widely accepted. So today, to understand what these ratings indicate, the factors that they take into consideration as well, and how much you as an investor should consider them when making an investment decision, I have with me Kaustubh Belapurkar, who's Director of Fund Research at Morningstar Investment Advisors India. Kaustubh, thanks a lot for joining us and making the time for this show. So, Morningstar also puts out these ratings for funds, and I want to just begin by asking you to take us through what star ratings are and what are they really based on? What are the factors that you consider when you arrive at a final rating?
Sure. So, hi, Pavitra, and thanks for having me on the show. So, I think that's a very important question that, an important topic to discuss in terms of obviously rating systems and really what star ratings stand for. So, I'll talk about obviously Morningstar star rating system, which, we've been running globally and in India for many, many years now, in fact, decades. So, essentially, it's focused on risk-adjusted performance, long-term risk-adjusted performance of a fund within its peer group, right? So a comparable peer group. And obviously from an Indian context, you have SEBI-defined categories now. So let's take an example of a large cap category fund, right? Essentially what the star rating looks to do is, and when you think about most traditional risk-adjusted performance characteristics, you think about return, you think about volatility, and then you have ratios such as Sharpe and standard deviation, which give you a sense of what has been the return per unit of risk and things like that, adjusted for risk-free rate and things like that. Now, while those are good ways of starting to think about adjusting for risk, I think the one thing often that gets ignored in this mathematical formula is how does an investor think about risk, right? I think that is the crucial part about, what do ratings stand for? And I think that's where we've developed our own proprietary rating system, which we've obviously kind of, fine-tuned over years of research. And the most important adjustment that we make is what we call an investor's utility for risk, which essentially means when there's volatility, there's good volatility, there's bad volatility. What does that mean, right? When you think about risk, there's basically a positive surprise to the investor, a negative surprise to the investor. Any investor hates the smallest of negative surprises. What do I mean by that? If I say on an average a fund has returned say 1% per month over the last 5 years, right, which is obviously an average return over those 60 months, there would be periods of time when the market was negative or the fund was negative and when it was positive. Now, obviously, if the expectation for the investor, the average return has been 1%, even if the return is 0 or -1, the investor hates it, right? So the smallest of negative surprises is something that the investor hates. But if it's a positive deviation away from the average, right, +3%, +5%, +10%, investors don't mind that, right? Greater return is good, obviously, albeit with the caveat that it does bring on additional risk. So what we look to do through this specialized function is adjust for funds that have very large downside surprises or negative surprises and deviations, and they get a very huge risk penalty attached to them, which essentially means that if two funds are the same and on average they've done the same CAGR, the average monthly return, like I use the example, is 1% per month, but one fund has seen returns in the range of -20 to +20%, on a monthly basis, whereas the other has been much less volatile and it's probably been, -5% to +5%. Now, the second fund will have a much better star rating purely because of this adjustment that we do, which we call the Morningstar risk-adjusted return. And the star rating is purely based on that from the context of the peer group, right? So how does this then get calculated, right? So we do this risk adjustment for each fund depending on their monthly return time series and calculate that. Then we look at that from the context of different time frames, right? Because it's important to think about the context of a fund, not just over a short term, but over the long term, right? And be very long-term investors and believers in long-term philosophy. So we would look at 3, 5, and 10-year track records and calculate this over that time period, and then compare that with funds within that peer group that have the same vintage, right? And then we would accordingly assign star ratings depending on, for instance, the best 10% funds in each time period with the best risk-adjusted return would get a 5-star. The bottom 10 would get a 1-star, 22.5 on each side would get a 2 and a 4, and the middle 35 get a 3-star. This would be done for all the time periods, 3, 5, and 10. And then you get an aggregated star rating that you would see for the fund, which is typically weighted heavily towards the 10-year time period in terms of 50% weightage for 10 years, 30 and 20 for the 5 and 3 years. That's how you would calculate it. So two important things to notice. One is that it's adjusting for risk from the perspective of how an investor would view risk or volatility in a fund. And more importantly, it thinks about it from the long-term perspective rather than really rewarding short-term outperformance and significant outperformance by.
Okay, so two questions now. How often are these ratings really revised? Are they, reassessed? Because there can be quite a change. That's one. And then I also want to ask you that there are a lot of other similar agencies, right, which do this, like a Value Research, like a CRISIL. So are they very similar in their approach and in their methodology as well? What I'm trying to understand is that a fund which is top rated by Morningstar, would that sort of figure in the top list for a Value Research or CRISIL as well?
Sure. So I think, let me answer, each question individually. So I think the first part of that, right? And I think that's very important to think about. So, how often do these ratings get refreshed? What is the change or the magnitude of change of ratings that can happen? I'll obviously specifically talk about our rating system. So one is it happens monthly. Like I said, it's on a rolling monthly time series, calibrated over 3, 5, and 10 years. So every month, the star rating would be regenerated for the fund. So, you would see that. But I think the most important point to make here is it is not that, the star rating would change month on month, or it would not change dramatically. And why does that happen? And more importantly, because, firstly, as an investor, you want a stable rating system, right? Because you don't want some rating that you bought into a fund thinking it's a 5-star rated fund, and then next month it's fallen to like a 2-star or a 1-star, right? I mean, that's not a stable rating system. That's clearly not what we're looking to do, right? Because that sends a very mixed signal to the investor, right? And because of the virtue of looking at long-term risk-adjusted ratings, I think our rating system allows us to be a lot more stable in terms of, the signaling to the investor in terms of the star ratings. So, typically you would see a rating probably drop by a notch at best. That could probably be because, the peer group is expanded or the fund has completed one of the thresholds of completing 5 years or 10 years or something of that, where you could see a little bit of delta, but obviously the performance has, kind of slipped in that sense. But all of this, leads me to believe that it's a pretty stable rating system that we have, and which, gives investors a reasonable leeway of thinking about as a shortlist tool for looking at funds, right? Looking at, obviously, I mean, the caveat that all of this is past performance risk adjusted based. So that's really about the stability and how often the ratings get refreshed. I think the second question about, yes, you're right, there's several other, sort of entities that issue rating systems. I think by and large, obviously they have their own nuances about the way they do it. But I think by and large, the underpinning philosophy in a way is similar. I mean, everyone's looking at some sort of element of risk adjustment, past performance based rating system within the peer group. Again, I won't really talk about what timeframes and all of that they do, but yes, the underpinning philosophy is the same. But it is very much possible that there could be differences between our rating for a fund and the other rating agencies. I don't expect this to be polar opposites. I'd be very surprised if you see a 5-star and a 1-star fund from one agency to another. But yeah, I mean, there could be subtle differences that will come. But yes, everyone runs their own sort of system in that sense. But yes, the underpinning philosophy, in a way, at least the broader thought process is similar, and then everyone will apply their nuances to it.
So then, Kaustubh, how much should one really rely on the star rating of a fund to make an investment decision? Because we are talking about this as sort of a one-point decision on, how a fund has fared. But of course, there are some other things to take into consideration as well. So how much should you really rely on this?
Absolutely. I think you've hit the nail on the head, Pavitra. I think we are very, very cognizant of the fact, even in our communication to all our investors, that look, this is essentially past performance risk-adjusted base rating systems, right? So you need to think of this as a shortlisting tool. Now, as an investor today, obviously you're looking at 40 plus categories of funds, and within each category, you would have 30 to 40 funds, and this number is only growing, right? So it becomes a very difficult starting point itself for investors to, where they're left scratching their heads that how do I really go about this exercise about picking funds for my portfolio, right? So I think, what we believe is that star rating systems help investors at least start thinking about that, okay, if I wanted to say, for instance, pick a large cap fund or a flexi cap fund, within that category, which are the funds that have traditionally done well on a risk-adjusted basis over the long term, right? So I think that's maybe like a shortlisting tool, right? So if you want to bring that, level a number down from 40 to say, maybe the best 5-6 funds or the best 10 funds, and which then you can do some analysis of your own to figure out, which are the good teams, which are the portfolios have been run with a particular style, how does it fit in your overall portfolio, from a style perspective, have there been any fund manager changes or not? All of that needs to be done. So I think that's a good shortlisting tool, but it shouldn't be your end decision-making point when you think about using the star rating system. But it's a good signaling tool for sure that allows you to think that, which are the funds that have done well, and especially from our rating system, I think over a very long-term risk-adjusted basis, which gives out a pretty good signal, I would say.
Okay, understood. I just have one final question, which is that, even the best performing funds can and do see a fall in ratings, right? Sometimes for several factors, maybe the market is not moving in the way that the fund invests. So there could be several factors as well, and it's not always an alarming sign. But I want to ask you, when do you think it is a matter of worry for an investor, and when should you really look at your fund star ratings and begin to assess if your investment in this fund is worth it or not?
Yeah. So again, I think a very, very valuable sort of question here, Pavitra, because, yes, like we said that, rating systems, at least from our context, are pretty stable. So you would not see a fund dropping off the cliff for sure. So that's definitely a, case that, investors have that comfort that, look, the performance may be sliding, albeit slightly, but, it's not like it's gone off the cliff at all from a rating system perspective. I think the other thing, and I alluded to that in my previous response, that even if you're seeing, either you're looking to buy a fund or you're already holding a fund, for instance, that, you bought at that point was probably 5-star, now it's dropped to maybe 4, or whatever the case may be. And you might be wondering that, what do I do with that fund? I think the most important thing to look at is the portfolio, which, when you bought into it, is it being managed in a similar way? It could be in terms of the capitalization bias, could be in terms of the style, growth, value, blend. If you see there's a good amount of consistency in the way that portfolio has been run over a period of time, I wouldn't really worry too much, because it could just be a function of the market, right? I mean, classic case in point, when you had value funds struggling in years of 18, 19, 20, obviously on risk-adjusted performance in the year 21 might have probably looked a little poorer as compared to say the growth style funds, right? That's obvious because growth had a wonderful run up in those 3 years, right? And a significant outperformance as compared to value. So yes, value funds on a risk-adjusted basis would have dropped, but I think from our rating system, they didn't really drop that significantly as compared to the growth style funds. So at least that signaling factor was still there. That's one thing. And the other thing is, I spoke about doing this analysis. I would actually, not penalize the value funds, because they continue to do what they were doing and obviously came back strongly as the value rally played out. The same thing's kind of in a way playing out with quality and growth style managers right now. So I think that's the important thing. If nothing has changed, then you don't really need to worry, because it's probably just a temporary market headwind to the performance of the strategy. And I think the others should also follow in a way that and some way the star ratings will capture that, because I said long term, so it's over a long market cycle. So our rating system does capture that pretty well. So it's not like a 5-star fund is going to become 1-star. So that should give comfort to the investors. But yes, I mean, do this bit of analysis for sure, because there could be fund manager changes, for instance, or a style change altogether. While they're probably limited in today's context, but they've happened in the past. So I think that's one thing that you would want to keep an eye on, because then maybe the previous track record is completely irrelevant from where it stands today.
All right, Kaustubh, thanks a lot for joining us on this special and really explaining what goes into arriving at a mutual fund star ratings and everything that you take into consideration. Also, how much you should really rely on this as an investor when you're looking at any kind of star rating for mutual funds.